Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Last week we heard how both consumer and business confidence is picking up just in time for Christmas. It's good news for retailers with lockdowns lifting, vaccination rates soaring and customers returning to bricks and mortar shops. Scentre Group, which owns the Westfield malls across the country, says occupancy rates are now at 98.5% and more than 95% of stores are open. So, what's all this mean for investors? Ben Gilbert is the head of Australian research at Jarden and an expert in retail. Ben, welcome to Fear and Greed.
Thanks very much for having me.
So it all sounds pretty good. Are conditions right in the run-up to Christmas, do you think, for retailers and people thinking about investing in retail stocks?
Well, look, there's definitely a lot of money that's swirling around, and I think as you said, we're seeing confidence starting to pick up. The retail updates have shown that trading's progressively got better since the August update. So, look, I think there's definitely some confidence around. The challenge is if people can actually get the stock, because as we know, and we're seeing this pretty well publicised, so definitely some stock challenges out there in terms of from a supply chain perspective. But look, I think the big test is going to be the Cyber Monday and Black Friday that's coming up. We'll see how those sales go. And if those look pretty strong, I think it's going to be a pretty good barometer for Christmas.
Black Friday and Cyber Monday, why are they so important?
Well, look, I think the challenge for retailers historically has been you've got such a high concentration of sales and profit that falls in a couple of weeks. So if you can spread that out, it takes a lot of pressure off supply chain. It also gives them a bit more visibility as they head into Christmas and also allows them to manage their promotions. But look, they're great events. And the reality is November last year was an absolute cracker. So they're obviously going to be working pretty hard to try and maintain that momentum. And if you can set yourself up with a good November around these sort of cyber events, it allows you to manage your Christmas trading much, much better. And the fact that we've got a lot of money, sort of a couple $100 billion of savings, people have been locked up for the last couple of months, I think people want to spend. The question is going to be what categories they spend on. And if you look at some of the stats and the numbers out there at the moment, you're seeing restaurant bookings are obviously very strong as we're seeing a big shift to services. You can see that with a lot of the high frequency data out there from CBA and NAB. So it's going to be a bit of a question about what they spend on.
So let's get into that. You go to a shopping centre in New South Wales, at least at the moment. It's busy, but it's not super busy. And if you think of all the Premier Investments stores, the Peter Alexander's and the Smiggle, those JB Hi-Fi, Adairs, Nick Scali, some of those discretionary retailers, it just doesn't feel as if they're super busy.
Yeah, well, look, I think the traffic you see in the stores, so if you look at footfall, for instance, you look at Google mobility data, you can see these sorts of things. Traffic's coming up to sort of broadly in line with where we were pre-COVID.
Okay.
But the challenge that you've got is it's hard to get into the store at the moment.
Yeah.
So I think what you're finding is the conversions are higher. You can see that with some of the updates we've had from some of the property guys this week. As they're saying, look, traffic's down X, but the reality is what we're hearing is the sales are much, much better. So people are actually going in with purpose. You're finding that people aren't sitting there probably browsing around as much because they don't have the confidence to walk around, whether it's sort of concerns around COVID or just the fact you've got to check in to get into every store and then show your little tick that you're vaccinated. But I do think conversions are up. The interesting thing for the property players heading into Christmas is how quickly traffic resumes, because as we know, and you can see it with Ozpost was talking about it this week, there's challenges around getting product delivered pre-Christmas. So I think online penetrations could remain strong, but I think people are going to have to get back into stores to get the product that they want.
Yeah, that makes a lot of sense because I only go to the shops now if I have a purpose, as you put it. What about bricks and mortar physical stores versus online stores? How do you think that'll play out in the next sort of 3 to 6 months? Well, I suppose in the run up to Christmas particularly.
Well, look, I think we've definitely had a bit of a sugar hit with COVID for online. You've seen online penetrations kicked up quite materially. But I think if you look forward now, we're going to have to see some sort of moderation in online penetration. So I think stores are going to come back in a reasonable way. But the thing that we've seen, and I think what's really interesting through COVID is just the amount of data that's been collected out there.
Yeah.
And there's some big data plays that's happening at the moment. You've seen Bunnings and Officeworks have moved on to Flybys this week. Wesfarmers are looking to propose to buy API. They're going to get access to 8 odd million members of this sister club. It's all about data now. And I think what we're going to find is that a lot of these big retailers are going to try and capture more and more of your wallet and move into more adjacencies. And they're going to use online, they're going to use stores, they're going to use however they can to do it. But to the question, I think exactly around stores, what we're seeing at the moment is click and collect is what's really kicked up, because people don't have the confidence necessarily to order online. So what they're doing is they're moving into store, they're picking up their product quickly, and they're moving out.
Okay. You mentioned just then, I think it's Woolies and Coles are both improving their back office to improve that whole click and collect play, but they're going beyond what we would traditionally think of what you'd go and buy from Woolies and Coles. What's the story behind that?
Yeah, well, this is what I think is probably one of the most interesting things that's coming out of the last 12 months, and probably something that doesn't get as much discussion or news out there as it should is just the level of brand trust. And if you look at what's happened with Coles and Woolworths in particular, you can see it with Bunnings, is that brands that have delivered, executed, and given customers what they want in a safe environment, they're much, much more willing to engage and spend money with them. And what I think this means moving out is for Coles and Woolworths that you mentioned, and Wesfarmers as well, is that they're looking for opportunities around how they stretch their brand or move into other adjacencies.
Yeah.
So Woolworths have launched a marketplace. They've got the fantastic slide, if you look at their investor presentation, looking at their ecosystem. And I think we've talked about omni-channel, but I think the new buzzword for retail over the next 1, 2, 3, 5 years is going to be ecosystems, because they've got opportunities to move into whole other areas. So Woolies, for instance, has got an enormous media business now called Cartology that's generating tens of millions of dollars of revenue.
Yeah, right. Incredible. Is Coles in that area yet?
They are, but I think Coles are probably a little bit behind Woolworths, but they're definitely putting a lot of money behind it. So Coles are spending billions of dollars at the moment on their supply chain piece. So they've got a partnership with Ocado, and they'll be launching their first couple of sheds with Ocado in the next couple of years. They're also doing this something with Witron, where they're getting an automated DC. So they're doing it. Coles have launched a special buys site in the last couple of weeks. There's only a few products on there, but that will expand. And look, I wouldn't be surprised if in the next little while we saw Coles move with a bigger push into the marketplace space as well.
Stay with me, Ben. We'll be back in a minute. My guest today is Ben Gilbert, Head of Australian Research at Jarden. Okay, so let's bring it back to investors. Do you think the companies that do best with data, and the big guys probably have the competitive advantage in that, are more likely to outperform?
Yeah, look, I think they are on a 3 to 5 year view, but the challenge is it costs a lot of money to get there.
Yep.
So Wesfarmers, for instance, are spending $100 million this year around data and analytics through their Advanced Analytics Centre. Super Retail Group spending over $10 million from what we estimate on their loyalty program to get that right this year. So it costs money. So yes, from a longer term piece, I think it will. And I think that's why you see something like Woolworths trade at a premium. But nearer term, I think some of the dynamics are going to be driving share prices are going to be a little bit different. So for supermarkets, for instance, it's about inflation. And it's going to be around how we see that inflation dynamic play out if they can maintain their margin. For the discretionary retail, it's going to be how Christmas plays out. For super retail, carrying a lot of stock into Christmas. Now, it's going to be a fantastic decision in the sense that they're going to get some strong sales and good margin, or it could cost them if they have to discount. For something like Domino's Pizza, it's all about Japan at the moment, and if Japan can start to see some growth. So, yes, from a longer-term lens, I think that's what it's all about, and that's why they're going to be trading at bigger multiples. And nearer term, it's going to be some of these shorter-term dynamics in their end markets.
So, Ben, what do you like? This is a $64 question among the retailers.
Yeah, look, from our perspective at the moment, the supermarkets are ones we think are looking pretty good. And the reason we say that is that it's a bit like the banks, when you see a lot of the shorts on the banks out there, we've probably, from the analyst community, have probably called zero of the last 4 inflation cycles we thought were coming in food. And I think what we're going to see this time is it's pretty clear that it's coming because there's been changes around the grocery code of conduct. You've got pretty clear dynamics in freight. You can see input costs. You look at what's happening with coffee. You look at what's happening with steel prices, which goes into the tin cans of tomatoes, etc. It's coming, and we're hearing it out there in the trade. And the reality is that it's the things that supermarkets have to manage. But if they see inflation coming through, it drives an enormous amount of leverage through the P&L. So we upgraded Coles recently to overweight. I think that's one that's going to be performing pretty well. The other piece is the Coles will benefit from the reopening because they do have more stores that are skewed towards CBD. So I think Coles is an interesting one. Metcash is another one that we like as well. You've got housing in there too. Metcash own the Mitre 10 brand and home timber and hardware in Australia. What you're seeing at the moment is a trade. It's very, very strong. So Metcash is another one that we like as well. The one that I think is probably creating a bit more debate out there at the moment is Domino's. It got knocked around a bit the other day on an update. And the debate there is Japan. And the other piece that's, I think, is right at top of mind for Domino's at the moment is M&A. So, look, I think Domino's is an interesting one too, and one that we like as well.
What about the online plays, the Kogan.com, Temple & Webster's, those types?
Yeah, look, I think Temple's, they're good operators. They're going to obviously get some benefits still coming through from the housing side of things. I think the interesting thing in online now in Australia is there's a lot of people playing in that space. There's a lot of money that's been put in there. And for all that we like to say that Amazon has not necessarily been as successful as everyone thought, look, I think the reality is that it has actually been very successful. So I think players like Temple & Webster that aren't necessarily going to be in as much direct competition as Amazon because they don't want to necessarily be delivering as much furniture. We'll be well positioned.
Yep.
So there are other ones. I think we're going to see more competition out there.
Okay, so when I have looked at retail over many years, sort of as a reporter, so I'm far further removed than you are, management in retail seems to be really critical. I mean, management's critical no matter where you are, but it just seems to me in retail, good management really matters.
It does. And I think different businesses need different types of managers. So you look at apparel, for instance, you have people that go and leave or people that leave the business from a design perspective, and you can see some pretty material impacts to trade if they get the trend wrong.
Yeah.
Similarly, you look at something like grocery. You need to have a longer term lens, think about how you're managing the business, utilizing data, etc. So look, it's very important. And I think at the moment, we're pretty lucky in Australia. We've got some great managers that are running these businesses. And look, I think probably one of those stories is Domino's with Don May. And you look at what he's been able to do with that team and taking hold of businesses globally. You look at Germany, what they've done there since taking that business over.
Have you ever met a more enthusiastic CEO than Don May?
Well, yes, but he's passionate, and that's what you want. And
totally.
he lives and he breathes it. And the thing is with Don and the team there is that you look at what happens offshore, and that they learn from Domino's Australia as well, which is amazing because it's a global success story.
Yeah, sure is. Okay, Ben, thank you for talking to Fear and Greed this morning.
No problem at all. Thanks very much for having me.
That was Ben Gilbert, Head of Australian Research at Jarden. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.